we're not here to give you a lecture about cyber insurance. You're not going to leave here as cyber insurance experts. We just want to, I would say, our objective is to kind of take the veil off of cyber insurance, remove some of the mystery, so you just have a better understanding of the dynamics of what's going on right now and why does it seem like it's so crazy. Because I think with a better understanding, you'll be able to make better decisions, better investment decisions. You'll know how to buy the right insurance for you. Just like we talked about before, every company's risk profile is different depending on their situation, depending on the assets that they're trying to protect. The same could be said for cyber insurance. The cyber insurance that's exactly right for one company is not necessarily exactly right for another company.
I think with regards to demystifying the world of cyber insurance, I would start by saying it's actually quite simple. There are two fundamental parts to a cyber insurance policy. One is what we would call first party, and the second is third party. Mm-hmm. When this cyber insurance industry started maybe 10 years ago, started in earnest about 10 years ago, I think there was a big fear and a thought that most of the claims would come on the third party side. And just to better define what first party versus third party means, third party claims are ones that are made by outsiders against you. So let's just say you've got sensitive information on your system is breached, some of that information is released to the public, perhaps posted on the internet, and it's that fear of being sued because of that loss that drove really the formation of the whole cyber insurance business. What's happened, and I'd be curious as to Ryan's take and anyone else's take in the audience, is it's for the time being at least, it's gone the other way. Most of the claims that are made against cyber policies these days are what are called first-party claims. They're claims, basically, it's on your own property. So, for example, if there is a breach, the first thing someone needs to figure out is what happened. Who got in there? Can we figure out what they took? Or if it's a ransomware situation, how can we get back into business? It's those costs that are incurred throughout that process, which are all considered first-party costs, and by far today, those are the ones that insurers are paying. So I'll stop there.
Well, and that's certainly what we're hearing most of the headlines around,
yep,
with all the ransomware payments and that kind of thing. So Ryan, maybe just dig in a little bit to that. With the recent increase in ransomware and the payments and insurance companies pushing back and then readjusting their application. Just kind of unravel all that for us a little bit.
Yeah, I mean, it's completely true. The first party is the main driver in claims. If you look at the data, ransomware claims are the most volatile. I mean, they're out of this world expensive to remediate. And then on top of that, you have social engineering claims. And that's the most frequent type of claim, right? And for everybody else, social engineering is when you're tricked into sending out funds to an incorrect address. And, for example, I've seen ransomware claims where it's a full decision, board on the email, and the hacker is just sitting in the email in the back, and right when those wire instructions are being sent, he jumps in. So there's 10 people on this email chain. It's almost impossible to check in. And instead of using vendor.com, it's jim@vendor.co, and he sends out the invoice, and boom, money's gone. And good luck getting that back. And so there's a lot of expenses that are associated with that. So absolutely, I mean, first party is huge.
And I really want to highlight that social engineering, sometimes it's called ACH fraud, which I know is slightly different but related. But I think that really brings focus to the point we were making earlier about you don't have to be this high-tech company with terabytes or petabytes of data in some cloud to be a target of a cyber criminal. You can be in, you name the industry, the construction industry, you know, that ends up having to write big checks, big cash transfers, right? Very little data, no online presence. You just use the, you know, this SaaS application, that other SaaS application, and bam, huge claim.
You know, it's that's another talk about demystifying. That's another huge thing, and Jim just harped on it. When people think cyber, they think data.
Right, right.
And
it's like,
so,
I don't have data. I don't need cyber.
Exactly, and it's so much more than that. You know, if anybody would like to comment on this, but you know, how many businesses or software do you guys think you rely on, right? Does anybody
You mean
have
how many SaaS applications
Yeah,
do we
exactly.
run?
Like how many? Like from a number, do we think it's 1, 2? I mean, it's probably 5+, and 30.
Yeah, we have like
I mean,
30 to 50, I think, at Trava, and we don't have that many. It's amazing. So here's a stat for you. There is a high alpha company named Xylo, and what they do is they manage like SaaS companies for companies. They get a handle on how many SaaS licenses do you even know how many licenses you have to which SaaS applications there? So they're a little shim in there. Do you know how many like SaaS vendor applications they track? 20,000. 20,000. And the customers that buy their services, the average number of SaaS vendors that they keep track of, 2,000.